Hey guys, welcome back to another episode of the Web3 Quick Buy podcast. The podcast where we jump to the latest beats in the decentralized world and chat with some of the brilliant minds in the Web3 industry. I'm your host, Olabisi, and today I'm thrilled to be joined by Chris, the CEO of Klink. Klink is the world's first price link savings platform for crypto users. Chris is pioneering innovative solutions to make crypto investing accessible for everyone while managing risk. Previously, guys, Chris led market entry for SumUp and revolutionary fintech products for emerging markets in Africa and Asia. He brings deep expertise in fintech and now is channeling that experience to bridge traditional finance and crypto. Today on the show, we'll tap into Chris' vision for the future of crypto, the promise he sees for Web3 to transform financial access, where the obstacles still lie on the path to mainstream adoption, and so much more. I can't wait to jump into this great conversation. Hi, Chris. It's so great to have you on the show.
Thank you very much for having me on and for such a lovely introduction. I really appreciate that. So thank you. Yeah.
All right. So, how is everything going over at Clink?
Things are going very well. So we started our business in probably the worst time in the world of crypto. So we've been running for about in the market for only around 6 months, but had our first round of venture about a year or so ago, a bit past the year. So we literally got in before the lights turned off in terms of the bear market. It was 2022, mid to late 2022. Three Arrows had gone down, Anchor Protocol went down, FTX went down. So we've only ever known a bear market since we've started. But 2024 is off to an amazing start, right? There's great sentiment in the market. So yeah, it's been really good over here. Great level of energy from us and the team.
Right, awesome, awesome. Okay, but first, before diving into today's conversation, I would love to hear the story of your journey into crypto space. I mean, what was your background before getting involved, and what prompted you to make that leap as a founder and entrepreneur?
Sure. I can speak first about my personal engagement with crypto. So, like many people, I heard of this thing called Bitcoin. Not when it had first came out. I'm not one of the main OGs, but around 2013, 2012, but really starting engaging around 2014. I was a student at the time, didn't have any money to be honest, right? So that was the first thing, right? But still managed to have my couple of $100 worth trading in, trading out of it. And as I went through my education, right, started working, it just started to accumulate more and more of various different currencies, right, digital currencies. So starting with the first and foremost Bitcoin, which is still the predominant within the markets, right, but venturing into ICOs, making money, losing money. Let's be honest, right? Lost a bit of money as well, but still very much in it from 2014, 2015. But really, in terms of horizontally aligned to my career. So I haven't been in crypto all my life. I finished university, started working for big tech in Dublin. I'm Irish. Worked for Twitter, worked for LinkedIn, helping on the ad side. So working with direct to consumer businesses around digital ad strategy, predominantly fintech and gaming businesses, which a lot of Klink is. I always feel we're a blended mix of that kind of engagement and service model when we go around our user acquisition. But had worked across a number of different countries. I lived in the United States, Ireland, obviously. I was in London for a few years, but eventually landed into Berlin, where from a professional perspective, I started moving into venture. I always wanted to be a founder. I was always very akin to learning about startups, seeing how they were growing. And I had worked in a number of scale ups, right? So like different stage businesses. So had really thrown my whole life and energy into the startup world. And then eventually wanted to get into my own startup, right? So around the time of COVID, I felt that it was the perfect opportunity. I had worked professionally for years, and this fire in me wanted to move forward in this direction. So I left the professional world and started working amongst a number of venture builders. So venture builders are basically incubation hubs to validate various different business ideas. But I didn't start with crypto. I had worked in logistics, validation, I had worked in energy validation. I had worked in I forget now. I had worked in various different segments basically to validate to see if there was an entry to the market, even warehousing. So I had tried various different things. But where I really started to gain energy, it was around validating kind of crypto services. We're bridging Web 1 and Web 2 services into the world of digital assets. I think that's still very much um, a space that is ripe for innovation. We're seeing obviously the ETFs coming out. It's not a question of if, but when institutions start having digital assets within their balance sheets, etc. And there's a huge opportunity for traditional financial services to be mirrored into the world of crypto. So I had worked in this namespace for maybe 6 to 12 months with my co-founder, Philip, who's the co-founder of Klink now, where we basically managed to carve out a validation space around gamification and traditional saving schemes within the digital asset space. So that's where the kind of bones of Klink was born. And yeah, managed to raise our first round of capital in 2022, as I'd mentioned. And yeah, since then have been full-time, fully fledged in the world of crypto.
Wow, that was quite an exciting journey. So, as a follow-up question, would you say it's easier to build a startup in Web 2? I mean, based on your experience building a startup in Web 3, which would you say is easier?
It is undoubtedly easier to do a business in Web 2. So, like, there's pros and cons in terms of the way in which we operate. I think the pros I'll start with for crypto is it's a worldwide ecosystem. So if you're raising venture in the Web 2 world, or even, aside from fintech, just, any type of industry, right? If you're looking at traditional industries, warehousing, as I've mentioned, a lot of the time, the way in which you can raise venture and capital is very geographically based. So, if you're trying to raise in Germany or UK, etc., your market is typically where the venture comes from. And that can sometimes be a little bit limited. It's very hard. You're limited in terms of the doors you can knock on for people and investors to get behind your idea. Whereas what's very beautiful about the Web3 space is it's international. Our investors are Asian based, they're US. We're speaking with many different investors from various different areas, but it doesn't just stem from investment. It's also in terms of collaboration, right? Businesses within the digital asset space, they grow through collaboration, association, partnering with different chains, etc. You name it, the ecosystems, the DAOs, the non-for-profits, the foundations, you name it. There's a huge community basis behind the world of Web3, which gives you huge advantages in terms of growing and engaging with other communities. Within the Web2 world, a lot of the partnerships that you lead from, it of course depends, right, what service you're in. But, again, they can be very democratic or, geographically based, right? So you're limited in terms of the reach that you can actually get, which I think is a huge advantage in Web3. Where the piece falls down in being a crypto founder is it can be very hard to engage with the outside world. So I can be very honest with you, although we're a licensed platform, we try to act in the very best way and interest in a legal manner as we can at the moment, while the goalposts consistently change in the Web3 market, right? But we're very much for operating within the eyes of the law. We KYC, AML our users, we're licensed, etc. But we still fall short sometimes of being able to work with partners that are in the Web2 world. There can be limitations in the way in which you can market services still, because there's no real rule book in that, especially because it's so fragmented across different jurisdictions. It has been hard for us to collaborate with Web 1 and Web 2 partners, bank accounts, etc. The level of due diligence that happens simply from the time you mention crypto, it can be very hard to operate where these types of services and access as early stage founders would have are given when you begin, right? So there's no error and issue. So there's certainly a kind of a precedent and battle that you need to face sometimes with the outside world of Web3, which can be tough, albeit that is changing, right? Things are somewhat getting better. There is basically frameworks coming into place for businesses to operate, but crypto is still a relatively new concept. And what you would find is when you work with partners outside of the spaces, a lot of times they're not open to change. There can be a bad association with crypto, basically what's happened in the past 2 years, where a lot of different partners, banks, you name it, etc., financial services, intermediary, just general services that are needed, can be hard to get as a crypto business. So it's a frustration, but it doesn't stop us by any means. But they're two very different worlds.
Right. That was quite detailed.
Yeah.
Thank you. All right. So moving on, as an entrepreneur in the crypto space, right? What emerging trends or technologies are you keeping a close eye on over the next, let's say, 3 to 5 years, and why do you find them promising?
I think I'd revert back to my last question. So, like, you see various different innovations come and go in the crypto space, right? So, like, elephant in the room is the NFT space. So there's a real kind of argument there is does that segment of the crypto world recover? It can and it can't, right? It really depends in terms of the way in which the market sentiment is. And of course, you see ZK rollups. You see the ability in terms of bridging the worlds between Web 1, 2, and 3, etc., which is kind of the namespace that we're in. But instead of looking at technology, I think the better way to look at it is looking at trends. So, for instance, in the last year, we're speaking on, what's the date today? January 12th, 2024, whereby, over the past year, the whole sentiment has been towards more infrastructure plays, more layer ones, the ZKs, right? So the capital distribution within the crypto markets is still there. Of course, you would have seen all of last year, it fell off a cliff. There's way less venture coming in to support different projects, technologies, and innovations. But that really comes down to the state of the market, right? So, what I really feel, I won't say a 2 or 5 year trend, because a month in crypto feels about 3 years, right? I think anyone who's in the space knows that things change.
Yeah.
Yeah, things change so quickly. But I think what I'd be really looking for in the next 12 months is the shift again in terms of that global sentiment in the outside world in regards to crypto. So what does that mean? I think the passing of the ETFs will be that you'll see a lot of TradFi institutions, a lot of wealth funds, sovereign funds within countries that will start distributing some of their percentage allocation and balance sheet towards more digital assets, right? So that in itself brings a completely new namespace. In the first place, there needs to be custody. There needs to be basically infrastructure for large institutions to really safely distribute into. So I think Coinbase, custody, etc., has a monopoly within this, especially within the ETFs. But with the smaller money market managers, any hedge funds out there, there's various different solutions, I feel personally, that there are to be able to enable those businesses to operate in the way in which they're used to, right? They're very used to regulated services. So I think there's a huge space on a B2B side in terms of innovation in that regard. Now, in terms of where we stand as a business, I firmly believe that, we've been in a very dark hole since we started building, right? But from many of the founders I know and the people who are a bit further ahead in their life cycle as a company founder and have been through a few cycles, is there's basically an on and off switch when it comes to retail. Retail in the infancy of the crypto markets are either in or they're out when it comes to cycles. So I believe 2024 is very much the start of that, where retail, and I mean, Joe Soaps, people who are touching crypto for their first time, someone who's in the, any kind of market, who has heard of it from a friend, who's, maybe a bit frustrated they missed out on the last boom in 2020, I believe it was, around the crypto times, or around the COVID times, is that you're going to see a huge influx of consumers coming back in to try and capture the market, right? Which is very good for everyone in the space who's been building in the bear market. So I think services that are built towards catering to that kind of consumer base, those first timers, enabling that seed phrases are managed carefully and, educated in a way that, consumers can feel safe that they're using a normal fintech app, edu services, educational tech, where it brings users into, basically a funnel of education in terms of having to know how to manage crypto, to get the best out of their crypto, there's very interesting facts that, out of the whole staking reserves within the global markets, I believe only around 25 to 30% of Ethereum is staked. Anyone that holds Ethereum should stake it, right? And that's something that Klink enables, which we might get to later in the call. But there's a huge infancy in terms of that first retail market coming in to actually get the best out of their asset holding. So there's huge innovation spaces within there. And I think RegTech as well. I find RegTech very boring personally. I live in Germany at the moment. I went to a RegTech conference last year, and I was nearly falling asleep, right? But like, nonetheless, it's an essential technology, right? It's, allowing businesses to operate across borders. Again, looking at the outside world, if you look at, real basic software, right? VAT systems for businesses to be able to cross borders when they're shipping inventory, etc. If you look at Brexit, right? There's a huge amount of software bases out there and innovation that's come simply because of those legislative changes, right? That it creates industries. So I also believe as the regulation changes or becomes prominent, right, as they start passing it, Europe is passing MiCA's regulation, that's the management and crypto assets framework. We'll see an abundant amount of innovation in terms of allowing B2B and B2C businesses or a blended mix of both, right, to be able to operate efficiently whilst operating within the laws. So I think that's what we'll see sparking in the next 12 to 24 months. But my guess is yours for the next 5 years, let's be honest.
All right. So moving away from the future of Web3, now let's talk about challenges. Right. So what obstacles around user experience, infrastructure, or regulation still stand in the way of mainstream crypto and Web3 adoption? And how close are we to overcoming them?
So just to be clear on the question, it's based around what needs to change within the regulatory framework or the current state of it. Is that the question?
Yes.
Sure. So yeah, just highlighting on my last point, right? Things are still very fragmented, right? So like, I think the Europe where I sit at the moment has taken a great step in terms of that MiCA framework. What it does is give custodians, virtual asset service providers, a clear path to operate. So, there's always a push-pull type mechanism when it comes to legal frameworks, right? Where it's like, okay, I must abide by these rules, but of course they have to bring benefits. So the benefits that the MiCAs brings is that it brings a passporting capability for MiCA holders, MiCA license holders, to actually be able to market their services across Europe. So I really believe that this is almost like a sandbox for the rest of the world, in essence, right? Whereby, if you can imagine Europe as a proprietary state across a number of nations, right? You can almost see that as a global instance as well. Whereas prior, Europe used to work on a country by country basis. You would see a lot of different VASP operators where they will have a license in Italy, they'll have a license in the Baltics, Lithuania, Estonia, etc. Or perhaps that they have, at the best case, a UK FCA license. So that's for very much enterprise, very large crypto businesses. The likes of Coinbase and Binance have been fighting out for those. I believe Revolut has an FCA license within the crypto space. But what MiCA's passes now is that there is a common standard in terms of the way in which businesses operate, in terms of their custody, in terms of AML testing or onboarding, just basically efficiency in accounting. If the platforms have a token issuances, that there's standards within the tokenomics, etc. So basically a structured rule book to go by whilst businesses operate. And again, the benefits of that is that it allows businesses to know exactly what they can and can't do, but it also gives them an advantage over other businesses that don't have a MiCA license because they have direct access to the market in terms of the way in which they can advertise, the way in which they can solicit users, the way in which they can onboard users, what are the checks and balances that have to be done. But you don't have to do it on like a 20 different nation basis, right? Which gets very confusing. There's a lot of crossover and it can be quite complex to run your operations. So what I would envision in the next 5 years is that we'll probably see a 3 to 5 state major framework that I would like to see follows pretty common rules. So the SEC eventually, I feel, will come back with a standard type of MiCA licensing as well, right, which allows exchanges in the US to operate. They've taken their first steps with a lot of push, I guess, right, a lot of pressure from a lot of institutions to pass the ETFs. But I feel the next thing will be that standard framework. Coinbase have pushed for this. The director levels of Coinbase are very adamant. Brian Armstrong, etc. In terms of the SEC setting a standard framework to give them a rule book, right? It's simple as that, to let them to operate. And I think there will be 3 or 4 major geos: the North American market, the European market, the Asian markets, in terms of the way in which they look towards this macro framework or rule book. If that can be in place, it allows basically businesses to operate, right? Which I think is a beneficial to all of the crypto industry, because it allows FTX scenarios not to happen again, right? There's standards in accounting, regular checks, XYZ, right? And more advancements in terms of the auditing that can happen in crypto accounting as well, because it can be quite tricky in comparison to traditional accounting. And I think also in terms of the overall framework is understanding the difference between an institution and a DeFi business. So crypto companies and DeFi foundations are 2 very different things, right? A foundation doesn't have a central entity. The token or the foundation or the governance of the contributors will govern itself, right? And that's the beautiful thing of decentralization. And I think there should be very much a separation in legal frameworks in terms of the way in which institutions, such as Web 2.5 businesses, fintech businesses operating with crypto, etc., should operate with these rule books. So again, the likes of Coinbase, Klink, for instance, as well, we follow a similar rule set. But also that basically the regulators internationally understand the separation between those types of businesses that do have a central authority, right, and do have basically an institution and the way in which they operate, and then a framework in which DeFi businesses can freely operate in foundations as well. So I don't think we're miles away, but we're still very, very much in our infancy in this regard.
Yeah, I agree with the last line. So, there's been a lot of talk about how crypto and Web3 can facilitate new creative opportunities and economic incentives. I mean, they are varying, people have different views, opinions about this. So, what's your vision for how they can empower entrepreneurs, builders, and creators in the future?
Sure. So again, I think, from back to one of the first questions is, what is the difference between Web 2 or Web 1, whatever, the outside world, and Web 3 businesses? I think from a very top level, I think what's great about the networks and the foundations, such as Solana, Ethereum Foundation, etc., all of them, right? Cosmos, Arbitrum, they all have a huge entrepreneurial culture of enabling people to build on their chains. So this is something that's very unique, right? And what it fundamentally is again, a sandbox of innovation within different clusters of ecosystems. So that's just something that you don't see in other companies, right? So if you look at Stripe, right? So Stripe is a foundational fintech business in the world, and they have market share. They've been very strong in terms of what they've built, and it's a great innovation, right? But although they give access to APIs and there can be a private sandbox to their services, there's a complete differentiation in terms of the Polygon Foundation, right? In terms of actually paying builders, entrepreneurs, innovators, right? And engineers to basically just start building on top of their chain, right? So the possibilities are endless in terms of innovation. And what I think the foundations do very well in terms of their grant systems and in terms of their due diligence of open source building on top of their chains is they power innovation. So if you are, either commercially or engineering inclined in your skill sets, and you want to build in Web3, I think the very first thing you should do is look towards the grant systems that are available on the various different networks on chains. across the blockchain ecosystem. You would have seen more so in the bear market, there's a limitation in terms of these grants. There can be a slower process within it. But as we see the market start to bounce back now, there's very much a more of an open nature for those networks to facilitate and pay in terms of grants for you to start, innovating within their own ecosystems. So I think that's very much a unique proposition within the crypto space specifically. And yeah, from my experience of speaking with the various different layer ones and the foundations, etc., is they're very open to understanding and hearing your ideas, right? So, there's people listening immediately to what your idea may be. So I think that's very much a good start for a Web3 founder of any different skill set to start from.
Okay, so between DeFi,
Yeah.
NFTs, the metaverse, and more, what Web3 applications outside of crypto finance excite you most?
Okay. Yeah. So I'm a DeFi guy, right? So like in terms of the DeFi application layers, which is still really built on Ethereum, right? I think there's a huge when we speak around the bridging the gap, right? There's always you see so many pitch decks across the world as bridge the gap between X, Y, and Z. Is that when we talk when I speak about that previous piece of innovation, right? Is like, facilitating the money managers, facilitating the hedge funds, facilitating sovereign funds, you name it, is that DeFi in essence will be the real catalyst towards change, right? Because if you look at the real innovation scape towards finance, metaverse is one thing. NFTs, I think, are an application or a service within the crypto ecosystem. But in terms of real utility, in terms of actually improving finance, it's like, let's look at the issues that are in the world of finance, first of all. So traditional financial systems and banking systems, they're very clunky, right? They're built on old architecture, old technology, and similar to the manufacturing line, like you see Elon Musk, he's built smart factories, right? Revolutionary factories that use new technology that beats the likes of Ford and Volkswagen because they're all old machinery. They're building on top of old machinery. This is very much like the way in which the banking ecosystem works, right? It's a proprietary system. It's a slow system. There's huge amount of archaic ledger systems. It closes on Friday, right? It doesn't open till Monday. And it's expensive, right? If you look at the way in which, if you use your card to buy a coffee somewhere, right? By the time that gets to the merchant, right, and back to the bank that the merchant proof of sales system is owned by and going back to the merchant's bank, that transaction has gone across many different facets, right? In terms of that, the updating various different ledgers, and it costs money, right? It's expensive to do so. So like, there's a huge that's more one example, right? If you look at institutions as well, right? If you're a US business and you want to trade on the Swiss exchange by Nestle, right? You want to do it by Tuesday. You have to switch between two FX currencies. You have to wait for things to get settled. It takes time, right? It's slow. It's inefficient. So DeFi is an answer to all of this, right? It's basically an open, transparent, permissionless ecosystem where both retail and institutions can pass by opportunity, wealth, value transparently, efficiently, and for a cost efficiency as well, right? So all of those kinds of things I mentioned, they skip um, all those archaic steps that I've mentioned, right? Basically by running on chain. So like, if you look at the way in which lending happens now in terms of the over collateralization of lending pools, if you look at Ava, Compound, etc., and the overall TVL of DeFi, like if you look at the metaverse, let's be honest, it's dumped, right? Like, I think Mark Zuckerberg has moved away from the metaverse a bit as well. That was his bet in 2020. Of course, there's still an ecosystem there. NFTs have fallen off a cliff. They just have, right? Do you know what I mean? That their value has plummeted. But if you look at the DeFi ecosystem and the total TVL of the total TVL of DeFi, if you look at the total market cap, it did dip, but it's recovered, right? And remember that the DeFi summer happened in 2021, where you really started to see institutions coming back in, or coming in for the first time, people getting used to it. So I think that whole innovation space of enabling different institutions and retail, and just building a better system on top of the archaic nature of Web 1 and Web 2, is that, that is the real utility of finance, in my opinion, moving forward forever, right? Against any other innovation space that's happening within crypto.
Yeah. So you said something about opportunities. So let's talk about opportunities in Web3. What key opportunities could Web3 unlock for people that are not being served well today by traditional systems? And how might this be transformative?
Okay, yeah. So I think you can look at two markets, right? So there's the Western markets. I think that DeFi answer I've given you there, right, is building better, more efficient financial systems on an institutional level, especially on a retail level as well, right, and giving the ability to create a better ecosystem for the future, right? That's the opportunity there. But in terms of your question, the day-to-day person, right? It's like you can look at two things in terms of the retail side, which is wealth generation or utility. And I've spoke about wealth generation already, right? And a few points here. But in terms of utility, I think specifically within the emerging markets, globally, you'd be very surprised at how many people aren't served with day-to-day services, right? So just general access to bank accounts, in terms of corruption or efficiency of the central authority, the bank that is operating in the emerging markets, is sometimes these can't be trusted, right? Many people are unbanked. Many people can find it hard to transfer wealth or value across a transaction, right? So it can be from anything. It can be from purchasing something from a market somewhere on your Saturday shopping. A lot of different nations don't have the level of sophistication in financial services. And they probably won't, right? We're in 2024 now, and that level of integration across some markets just isn't there, right? So I think in terms of the retail side, an opportunity, having the ability to store wealth efficiently, which can be trusted, right? Where it's not going to be taken from you for many different reasons, right? Having the ability to manage day-to-day finances in an unbanked economy, general consumer-facing applications and day-to-day transactions. I think for those markets, the digital asset space in Web3 can be hugely efficient in terms of bringing those economies forward in a very quick manner. They already are, right? So you see in terms of the top emerging markets now, or the top 10 crypto companies, Coin Analysis did their report, where I think around 7 of the 10 nations were emerging markets in terms of crypto adoption globally. So the numbers will really speak for themselves. And I think maybe one more note in terms of innovation, right, is what we will see and what we have seen in terms of the markets over the past few years is a solution towards hyperinflation, right? So what causes inflation can be many things. A lot of the time it's true the inefficiency of central authorities, central banks, the way in which governance happens across economies, right? So we can use Argentina, for instance, right? Argentina is ripe to be a global powerhouse, right? Do you know what I mean? They have a huge country, they have huge amount of farmlands, they have full access to oceans, etc. But over the past 50 to 80 years, Argentina has really struggled with inflation, right? And at the end of the day, it comes from central authorities coming in and mismanaging users' funds, mismanaging the way in which a country should run, corruption, you name it, right? So I think on a step back, maybe not in terms of application or on a privatization of a business or a platform, of a way in which someone's building on top of a blockchain. I think cryptocurrencies and the way in which networks and chains can support a decentralized infrastructure of wealth holding is imperative to those types of countries, right? So like if you look, I believe Argentina recently got a new prime minister, is that he wants to move their standard away from their fiat currency at the moment into Bitcoin, right? So you need to be careful when you read headlines, like, you know, whether you do this or not are two different things. But what you would also see is a lot of different leaders within the Web3 space have called for innovation within a flat coin. So I'm not sure if you're familiar with what a flat coin is, but for anyone listening out there, a flat coin is basically what you can imagine to be a stable coin. So a stable coin is pegged to the intrinsic value of a fiat currency, such as US dollar, pesos, Chinese yen, you name it, right? There's various different stable coins out there. But what a flat coin is fundamentally is and no one has cracked this yet either, is a stable currency that is able to intrinsically stay upon the value of true inflation. So if you can imagine all of the different kind of vehicles in which to hold wealth, right? You have, you have property, you have equity, you have cash, you have gold, commodities, you name it, right? There's various different instruments in terms of holding wealth. And what many different money managers or people in the world who manage their finances is, it's always, where can I put my money where it doesn't deflate, right? And where I believe true innovation across these emerging markets and globally is for a team or a foundation, etc., to really solve that flat coin problem of tracking something that goes against inflation. And I believe that can be the truest innovation for any country globally that struggles with such of these problems, right? So, yeah, the opportunities really are endless, depending on which market and segment you're speaking of.
Yeah, the opportunities are truly endless. So, we talked about mainstream adoption and the future of Web3 earlier on in our conversation. But what do you think the world will look like 10 years from now if Web3 sees widespread mainstream adoption? And so, how could it change finance, social media,
Yeah.
creative industries, and more?
Yeah, I think again, I don't like to see past the 12 months to 24 months of crypto, right? But I will try to answer your question. So we have a while to go yet, in my opinion, right? So like there's huge positive sentiment. If you ever see the fear to greed ratio, I don't know if you've ever seen that bar, right? But like they're able to track fear to greed, and like we're in a high state of greed um, in the state of where we are on the 12th of January. ETFs have been passed 2 days ago, etc. Right? There's this great positive sentiment. But in terms of mainstream adoption, right? It's like we've been through three bear and bull cycles, and we still live in a very speculative world when it comes to the world of crypto assets, right? What brings a huge amount of interest and money still in is the opportunity to gain wealth, right? Through speculation of price action, etc. And as I'd mentioned, there's a whole battleground to go before I believe that there's a global legal framework for crypto businesses to freely operate, where they're able to get bank accounts and work with Web and Web2 partners with the issues that I had mentioned previously. So I think that whole battleground of legislation is still maybe another 2 or 3 year back and forth, especially when it comes to the US market, right? So we're not there yet. I think it's a great step forward in terms of the ETFs. I think we have a long way to go until that, 10 commandments of the SEC, etc., right? In terms of that real framework where businesses can operate, especially, right? But seeing past that is I see a world where, and this is really the holy grail, right? Is like when someone is using a financial service, your auntie or uncle, right, who's making fun of you at Christmas dinner because you work in the crypto world, whatever, right? You ever see the memes? Is that they're the people using on-chain services, but fundamentally they actually don't know, right? Is that, of course they're opted in, they understand that blockchain technology is powering the services that they're using. But blockchain is a technology, right? It's not a featured service that people should, fundamentally know about, right? It's like, if you're able to transfer wealth and manage your finances, and it's way more efficient, way more cheaper in terms of transactions, way more transparent. I think that's the perfect world, right? So like that's maybe, again, can't put a timeline on it, but I think the real integration of, if you look at a neobank, a fintech bank now, you have big leaders, you have Nubank in Latin America, you have Revolut in Europe, there's various different other instances across different regions, etc. But they're still using fintech technology, right? A lot of them are API based, they're still built on the banking infrastructure. So I think a perfect world in 10 years is that on-chain technology is a given, right? Is that, all of these businesses that are built on B2B APIs at this point in time, right? That fintech layer, which has been more dominant in the last, since 2020 to even now still, right? Is that on-chain services trump them, right? That's where the innovation comes in. It's like Web3 and on-chain services are eating into the fintech global market cap. And secondary to this, right, is in terms of the capability of smart contracts to facilitate various different transactions across many different facets of life, right? So in terms of rights of property, in terms of selling a car, terms of transferring any type of value across people, right? I think, we've a long way to go. Is that 10 years time? I don't know. I think what will come next, as the legislators come closer globally, is the topic of tokenization, right? So tokenization is huge. Tokenization is fundamentally being able to split the share of any asset, right, on chain across any different set of parties. So big fund managers, etc. Larry Fink of BlackRock, he's been very bullish around tokenization, because tokenization can be built into any segment of the market. It can move into commodities. It can be within splitting shares of equities. I've even heard of people splitting the ownership of racehorses through tokenization, right? So the countless possibilities of that are endless. But I believe that, before we go through that, there's a whole layer of private blockchains, not public facing ones, etc., that can even manage these levels of tokenization. So I think the money managers, the big funds, etc., on a technology side, I think private blockchains to enable tokenization, etc., is when you're really going to see that 10-year real mainstream global adoption. So we have a few steps along the way to get where that vision is, I believe.
Yeah. Oh, that was a brilliant answer. So let's talk about your mistakes. Uh, your mistakes and lessons while building in this space. So, as someone involved early on, what have been the biggest lessons you've learned, or the mistakes you wish you knew to avoid when you first started in crypto?
God. Let it be known, we're still making mistakes, right? There's still mistakes to be made. I have had businesses before, but Klink is probably the biggest business they've had. It's been the most amount of team I've had, etc., most formal, most time put in, right? So I do dub myself a first time founder. Mistakes are there to be made, right? I think anyone who doesn't make mistakes is lying, first and foremost, right? And it's like mistakes come at a level of opportunity, right? I think some mistakes I've made, I won't give individual scenarios, right? I don't think that's really relevant to the conversation. But I think the biggest mistake of making mistakes is that you don't rectify or understand the mistake you're making in a short enough amount of time. So everything around being a pre-seed founder is around trial and error. You're trial and error in everything. I've trialed and errored in the way in which I pitch towards investors. I've trialed and errored in terms of the way in which the team should be managed. I've trialed and errored in terms of the way in which we've decided to build the technology, the way in which we roll out our features, the way in which we build out our narrative towards our consumers, or how we position ourselves. I think the way in which you go about your day-to-day life, how you organize yourself, there's always mistakes being made. But if you can understand and have a third party perspective as you're going through your day to day and your operations is to understand at what point a wrong decision has been made or you're making, right? And number one, how to rectify it in the less operationally complex ways possible. So, actually being able to fix something without breaking something else. I think that's a real skill to make. You need to be very forethinking um, of how to do that, because a mistake and then changing that can lead into like a tin of worms, I guess, right? In terms of just being in an absolute mess. And also the way in which you can rectify towards an opportunity, right? I think everything is a lesson to be learned when you're in being a first time founder, right? And is how can you actually improve yourself once you have made such decisions, right? I think it's very important to acknowledge when you're wrong. It's okay to fret, to be angry, right? But it's also important to be angry at yourself, right? And to understand that the buck stops with you. Um, and yeah, I think a way in which you can self improve after each mistake you make is imperative. And that is the fundamental success of a founder, right? I also believe that the way in which you can take criticism in any sense or form, right? Criticism is a huge opportunity. If someone doesn't like you, even in your personal life, right? Or your professional life, you need to kind of just break down, if you hear criticism, whether it's from a business or a person, is, instead of um, letting emotions, your standard emotions, get tied into such things, it's like understand why that person or thing or company is criticizing you, right? Are they right? Are they right to be criticizing you? Is there something you can do to change that, aside from them, is, how can you self improve with such things? um, or yeah, as well as that, just pass it off, right? Maybe they're wrong. Many different factors come into place. But I think overall, when it comes to making mistakes, is to acknowledge that mistakes will be made, but to be able to manage this mistakes efficiently is probably the most important thing.
Yes, 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 yes. I agree with that. Managing the mistakes is what is important. Absolutely important. So, Chris, for most of my audience, most of my listeners, they are people who are looking to after easy in quote transition to Web3, or trying to get
Mhm.
insights and advice on what they should know or what they should learn about and whatnot. So, what is your advice for a complete beginner entering Web3? And what key perspective should upcoming Web3 startup founders consider?
Yeah, I think the education side of things is what I had mentioned a bit earlier in the call. So from a very top perspective, right? I think every company that has an academy or a learning segment or whatever it may so be is definitely a benefit towards the consumer, right? There's no doubt about that. But there can be times when that education is really built around their services. So, like, at the end of the day, it's still, content marketing is a very strong mechanism in terms of user acquisition. And, any content, as long as it's readable and it's correct, right, is good content from my perspective anyway, to engage a user base. You'd be very surprised about the amount of impressions and reach that such things can get, right? You see bloggers, influencers, etc. People want to learn, right? So, I think that's a very good I think it's imperative that businesses do it, right? They must educate users as they're onboarding, right? And I think the legislation, again, there are requirements in terms of, not only just onboarding a user, but ensuring they have enough efficiency of education to work towards what crypto assets are. Um, but what I would say is, don't believe everything you read on the internet, right? I think everyone should take the ownership in terms of actually self-education, aside from institutional or business third party education that comes from, not that it's a bad thing, right? It's all positive, but you should still learn off your own segment. So YouTube is the biggest source of information, right? Like, in terms of many people different starting, it's crypto 101. I think what is very important is to not listen to Twitter a lot of the time, right? I think short form content, um, has taken over the world, right? Outside of crypto, people don't read full articles anymore. You have clickbait, you have content that is short form, TLDR, because people just, I think people have been very much assigned and educated in terms of social media and the way in which the setup of online reading now is it's very short form. So a lot of the time, people can be programmed and wired off, headline information. I think it's very important that people actually read between the lines and actually do their own due diligence when it comes to sourcing various different information. And also acknowledge that you can very much just start from the very beginning, right? I would very much, I would basically pen to a person, it's like, before you get involved in crypto, understand exactly what a network is, right? Understand what Bitcoin is, understand the underlying technology. Even if you're not a technologist or you're not that way inclined, I think there's very good breakdowns online of simpler terms in terms of the way which blockchains and networks operate, etc., and their efficiencies. And if you're going to make investments, I think it's also important for you to understand the token and chain that you're actually getting involved in, right? So again, in terms of short form information and active content, a lot of the meme coins pump. If you want to get in and get out quickly, that's fine, right? But if you want to be a long-term holder and a beneficiary of being an investor in certain protocols, networks, and chains, I think learning the foundations of what protocols and chains are in the first place, and actually understanding the project after that, right? Actually reading their white paper, understanding the overlying utility of their token, and where in which their chain should bring utility, right? So again, on the topics of DeFi, metaverse, AI chains, etc., I think there's a world of knowledge in terms of actually making up your own decisions of what it is that you actually like within the way in which the world operates, and then taking your decisions from there.
Awesome. That was great advice, Grace. Thank you. And thank you so much for an insightful and exciting conversation. It was so great learning so much from you. And that wraps up today's episode of the Web3 Quick Bite podcast. We hope you enjoyed today's discussion. And if you have any feedback or questions, please reach out on social media or send an email at web3quickbites@gmail.com. Thanks again to Chris for joining us. And thank you, listeners, for tuning in. We'll be back next week with more exciting content. So be sure to subscribe and tune in. Bye.